everyone, it is Evan here from the Trade Risk on Friday, January 18th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So let's jump in here to our market technicals dashboard. We can see bulls at it again, closing strong on the week. Fourth week in a row, we are seeing upside, strong progress, strides being made. All of the major averages up almost 1% here on Friday to finish off the week, and about a 2 to 3% gain on the 5-day change. We have reclaimed now the 50 SMA across all of the major averages, and we of course are above last week's highs. We're still sitting below some of those 200 days, but we can see that it was financials this week and transports, but really those industrials, financials that really saw the rotation this week to give this market the next kind of leg up here. 6% rally for XLF, which is the financial sector of the Spider ETF, and banks did have earnings out this week, so we did get essentially earnings out, positive reaction into them and through them, and thus giving us those nice gains. On the downside, semiconductors taking a bit of a breather now, and utilities and biotech, which were the leaders that we saw over the past week or so. When we look at some of the other major markets here, we have natural gas, energy, essentially oil, right here at the top of the list, followed by equities, and on the downside we have volatility, which continues to still see those ranges kind of compress here. So let's jump into the charts of the S&P 500. We'll start with the weekly time frame here. This is the cash settled market. This is a weekly time frame, so each bar represents 1 week worth of trading. And when you look at this market, it's quite remarkable the speed here, right? Who says that markets take the elevator down and the stairs up? Because this looks like the elevator down and the elevator right back up. In fact, if you were to essentially just close your eyes in the second, third week of December and then reemerge now and looked at where the markets are versus where they were a month ago, you'd basically have said, oh, nothing's changed. The market hasn't done anything over the past month, but you really would have missed this massive, wild swing all the way down to 2350, and then the equally impressive ride all the way back up. So we have now reclaimed the breakdown level around 2600 in the S&P 500. We are above that prior key support level, which was something of importance for 2018, and we now find ourselves back into the old sort of range that we chopped around in back through October, November, and early December of 2018. So markets on this time frame are recovered a key 2600 level. That is important. That is good to see. That is constructive action. However, on this weekly time frame, we do still have a series of lower lows and lower highs. So there is still, kind of the damage here, or that downtrend intact for the weekly time frame. So as good and constructive as this 13% rally has been off of the lows, we still want to keep that longer term context in check here and understand that we are sort of extended in this rally into prior levels in the context of a downtrend. So let's not get too ahead of ourselves from the broad perspective. Certainly, again, this is where time frame matters, because if you're a short-term trader, you could have made your entire year over the past 4 weeks of trading if you've been heavy on the long side and sticking with the market. If you're a longer term outlook here, we still have headwinds ahead of us. You could draw this downtrend line. You could look at really 2800 as the big elephant in the room that we'd want to see this market take out to the upside to really start to give us more confidence that the downtrend has been broken, and now we can start to potentially break through this longer term resistance. So that's sort of the bigger structure here. 2,600 on the downside going forward now. If we do get that pullback, if we ever get a pullback again, that's what we're going to want to pay attention to on the downside to see if that can hold. And then we have sort of the levels that we looked at originally on the first breakdown that we can start to key off of if we start to get that pullback. On the upside, again, longer term, 2,800. I would not expect to go there in a straight line, but I didn't expect to get where we are now in a straight line either. So anything is possible. Let us go down to a daily chart now of the S&P 500, and we take a look here at some of the levels that we're coming into now. You can see a lot of lines drawn on this chart. This is from, back in October, November, December range. This 267 level, this was kind of an influential level, is where we stalled out right before the sort of precipitous drop we saw in December. We got this nice little kind of 2-day bounce into 267, and then that's when everything sort of rolled over and we lost a swift 10-12%. 267 is also an important level back earlier in 2018. That's where the market kind of inflected many times before. You'd have to just zoom in a little bit more on that action, but you could do that following up this video. So 267, little price memory and some significance there. We came into it on Friday, into the end of the week testing it. We still closed strongly here. You can see the market getting a little bit accelerated here into the end of the week. In other words, we saw the slope of this rally start to accelerate just a little bit. So it'd be interesting to see if we're coming to the end, sort of a buyer's exhaustion, if you will, kind of max FOMO here as we start to really race higher. That is something that we'll need to pay attention to. We have maybe, if you look at an intraday chart, you could get a more accelerated sort of trend line to pay attention to if you're looking at the action pretty closely on a day-by-day basis. Otherwise, when we zoom out here and we just look at these overall levels, really we just have a lot of these micro levels that we can look at, about a little over 270, 273, and then of course the big 280 that we looked at before. So far, the market's essentially sliced through every resistance level. Nothing has been, proving resistance at this point. So all we can do now is just continue to map out these levels of areas to pay attention to. Again, 270 is essentially the next kind of bogey on the upside if we can rally through this 267 where we closed at here on Friday. On the downside, again, 260, that was essentially the top end of this range here. That is what we started to clear above on Thursday's trading. So if we look in here at this little 4 or 5 day range that we carved out, 260, that is where, again, we found that nice reversal on Tuesday. We had the midweek video. We talked about the lack of follow through, the lack of conviction out of the sellers. Talked about the short trade that we had on here at the beginning of this week as we tried to sort of front run a potential move to the downside. That got no follow through, as totally reversed on Tuesday, and then we just essentially got the follow through higher. We exited that short trade on Thursday, essentially in short at the beginning of the week, and then just 2 days later, out of that trade for a loss. So shorts still getting squeezed here. No chance whatsoever when we don't get those follow through days to the downside, and that will eventually change. Maybe this is the peak here on Friday, but maybe it's not. So we still just essentially have to wait for that reversal and confirmation. Again, the way I like to look at it first would be breaking below a prior day's lows. That's generally speaking the first hint of signs changing. We did get that here on on Monday. Which is one of the things we were looking at when we were initiating our shorts, but we never got that follow through. We never got that confirmation lower. So if you were waiting for confirmation, maybe you got saved here. If you were jumping the gun early on Monday, then of course you may have taken one on the chin there, similar to us. So when I look at the action now, again, we're just clearing above prior day's highs, nothing of interest to do. But if we start to move sideways a little bit, then take out a prior day's lows, lows, break a trend line, do it on increased volume. Those are all things that would signal potential subtle change here in the short-term character. Otherwise, pay attention to those levels. You can draw your trend lines and watch the action sort of unfold. But the same comment essentially that I've been saying over the past 2 weeks is that it is increasingly difficult to purchase new longs given where we have come from, given the fact that we've rallied here in a straight line. I thought last week it was difficult to put on new longs. Well, I essentially think it's even tougher now to put on new longs, but let's be 100% clear. The long side is what has been paying over the past 3 weeks. Make no mistake about it. The trade has been to be long and stay long in the face of sideways movement here, and that is still the trade. But to say that we should be committing new capital here for my time frame, the way I look at markets, I don't see it. But if you're looking at things a little bit closer, if you're managing things very tight, then certainly there are probably pockets of opportunity, not necessarily in the SPY outright, but individual stocks that may justify it. So lots of specifics there that come into specific strategy and timeframes, which is sort of beyond the scope of this video, but just for broad levels, we are extended here. The VIX here, of course, has continued to just pull back. Pullback is the gentle word of saying get cut in half over the past few weeks here. We are starting to see it stabilize just a little bit, but still we're sub 18 now, so there's lots of sort of complacency into prior supply, but until that means something, we'll have to wait and see. We have markets closed on Monday, which I don't know if I mentioned at the top of the video, but we do have markets closed on Monday, Martin Luther King Jr. Holiday, so do expect that. Reopening on Tuesday. We have earnings season that is still sort of amongst us now. We've had financials essentially report. We had one big tech. We had Netflix report. And then we'll have more coming down the pipeline, so do be aware of that. And I think that is everything I had for the S&P 500. Let's go to the Russell. The Russell was one of the markets we talked about on Tuesdays. In Tuesday's midweek video, we said, look, the S&P 500 and the Qs were starting to lift higher, but we didn't see that initial evidence out of the IWM. We saw a little bit of a stutter step here, and this has been the leading market, so it was something that we said we wanted to watch into the end of the week, and you can see this quickly recovered its ground and acted in true leadership form to break out and continue higher here above 144, 145 area. So the IWM, we mentioned it on Tuesday, said we needed to watch it, see if this little stutter step here, this delayed breakout was something of interest, of significance, of a change of character. And as we see now in hindsight, it was not. This is something that has continued to work higher. We have a nice kind of orderly trend line here. So I guess that is what we continue to watch heading into next week. If we start to see things reverse, take out a prior day's lows, break a trend line, do it on heavier volume, and lose 144, I think you got a pretty good spot to pay attention to right around this area here. If we go to the NASDAQ 100, you can see this was the first to reclaim its 50 SMA. It is back into very well the midpoint of the October, November, December chop. MACD continues to make new highs here. Saw a slight uptick in volume into the end of the week. And again, it's pretty much a straight line rally higher, which makes this vulnerable and tough to want to buy and purchase new longs here. But we are well above this 160 breakdown area, and we are in this old chop here. So at the very least, I'd like to see some sideways movement, even if we don't get, just a fierce pullback here in price, to sort of set up new bases and new potential longs. So that is the market environment as it stands now. Continues to remain frothy here to the upside. We essentially have V-shaped rallies in perfect fashion right across all of the major averages. Let's wait for some stabilization there. Let's see if we can get a little bit of these conditions and froth to subside and set us up for some better new long entries or that short trade that I think everyone is still on hold or suffering from if they've been early. Let's go into some of the other majors now. We'll go to TLT, which was down on the week a little over 1%. We talked about this 120 level is an area where it would be a great spot for the bulls to step in here if you're a fan of the TLT on the long side. So far, they do not look like they are arriving. We saw a brief glimpse of buyers show up Wednesday, but it was short-lived, and we closed the week below it. So for now, TLT has kind of broken the shorter-term trend, is pulling back, still looks pretty orderly here, does not look like the end of the world at this point for TLT, but we're getting just a little bit more of a pullback into the earlier December gains, just December rally. GLD also getting a little bit of a pullback here, started to break down at the end of this week, slightly under 1% to close out Friday, threatening to sort of close at new lows and break down from this range that it carved out for a couple of weeks. It did enjoy a nice run throughout the course of November, December. So again, a little pullback here is not the end of the world for gold. In fact, quite healthy. So we'll see if that can get underway next week. And silver also kind of rolling over here after putting in some sideways consolidation. $14 was the big breakout from late December. Let's see maybe if we can get a retest of that breakout, and if that can hold, that would set up some good confidence, I think, and embolden some of the longs here for silver if we can stay above that $14. If we go to oil next, energy continues to work here, 3.76%, also helping sort of stabilize the S&P 500 when we have oil working higher now after its onslaught that it suffered at the last quarter of 2018. That certainly helps the S&P 500 stabilize and in fact continue higher. So USO right back into the highs of this December range here at $11.40. Let's see if we can get through it. This looks like it could be a nice little continuation pattern for a second leg higher. Maybe the next target is around this 1230 area where we saw this initial kind of bounce right around Thanksgiving or right before Thanksgiving in oil. We'll see if we can get there if this consolidation can hold. If we start to lose this, say, 1090 area to the downside, then I would be once again cautious or at least flat here, neutral for the outlook in USO. And finally, natural gas here, kind of all over the place this week. It still managed to finish plus 9%. Very impressive. It came into the week with a 14% day on Monday, and then it's essentially kind of chopped around with a slight down bias for the rest of the week. So UNG, master kind of gapper and really quite an animal of itself. So tough to want to do anything with this. This looks pretty tricky and fairly horrendous to trade right now, but intraday there is some good movement in there. That's about the only thing I'd be looking at for natural gas at this point. So that covers all of the major markets. Let's go into some of the individual sectors now. We'll take a look at top 3 and bottom 3 performers. As we talked about at the top of the video, financials was the rotation. That was the play this week. We could see 6% move for the XLF. That is a big move, and we're almost back to the big breakdown level around this 2630 area. Remember, we had this nice range kind of going for us for 2018 in financials. Originally this is what, back in the mid 2018, this is a weekly chart we're looking at, but we saw that nice support stepping in around 2650, and then even into December we kind of sold off right into it. We were seeing if buyers would once again stabilize at this 2650 year-to-date lows, and of course we got that big washout and we got a move all the way down to 2250 or so, and now we're kind of coming back into all of this overhead supply. So kind of the same thing as the S&P 500. The rally's been great. It's the elevator down, elevator back up, but structurally this is still kind of a tough spot here. Maybe this is the bottom, right? Maybe this is, we look back and this is just the V shape that just rips to new highs here, and it's all clear in hindsight. But for now, if we're looking at this as sort of opportunity opportunistically, it's really tough to want to buy into this type of zone on a retracement. So, you know, to each their own, they have to look at that based on their strategy, but good rally. Not sure that I would be a buyer of it or believer in it necessarily right now. XLI, this one here also kind of recovering, nice V-shape, 3.5% to the upside this week, getting back into the breakdown area. Still a lot of overhead supply in here, still in the context of a downtrend, so got to be careful, but good recovery progress, good thrust to the upside, as technicians like to say sometimes. And energy also getting a nice rally here, 3%, makes sense. Crude, natural gas, commodities moving, energy also moving, recovering back into the December area here, and very much in V-shaped fashion. On the downside, we had utilities, again, pretty much just flat, didn't have a negative week, just stabilizing here, trying to find buyers around this $52 area. Looks normal to me, looks kind of healthy, and what we might want to expect here is support kind of coming in at the bottom end of that range. Biotech, a little bit, you know, I mean, still close right at the top of the end of the range. It's funny, I mean, it looks perfectly fine and healthy, 1.34% to the upside, but just on a relative basis, it wasn't the top of the cream of the crop leadership, but it is still holding above 100. Remember, this was one of the first. This was in week 2 where it reclaimed its big kind of breakdown level here. So for me, IBB is still actually looking, you know, pretty good. In fact, on a pullback, it wouldn't be unreasonable now to see, you know, a pullback of about 40% of this rally into this $100 level. Let's get support. See, you know, if support can demonstrate as being support again and holding, then that would be interesting for me. But for now, IBB working back up into the top end of this range, 115 or so. That's where I'd pay attention to. Maybe it's heading there in the next week or two. And semiconductors, again, positive, still made progress this week, just on the bottom tier, bottom of the relative strength pack here. Did reclaim that December level. Looks like it could get all the way back up and sort of retest this 96. So maybe there's still a few more points of upside before this runs its course, but there's a lot of overhead supply, so it's tough to be the marginal incremental buyer here. Just really depends what you're looking for. Trade into 96 does make sense, but just really, you got to figure out where your stop's going and how you're going to structure that. But semis, we'll see if they can get back up here, and then the real work will start trying to reclaim the bigger kind of $98 breakdown level. So that is the action from this week. Lots going on. Bulls still on parade. No selling pressure to speak of. We'll see if that can change heading into is it the final full week? It looks like I think the final full week of January, first month of 2019, almost in the books. We'll see how that wraps up. Holiday shortened week. Thanks so much as always for watching. Every Tuesday and Friday you can subscribe on YouTube or follow us on the Trade Risk blog. Thanks so much, and talk to you next week.